Let me ask you something. It's March 26, 2026. Bitcoin is sitting at $68,951 right now, down from a 6-week high of $76,000. And most people are watching it, waiting, refreshing their portfolios, wondering if the move is already over. But here's what's killing me. While everyone is staring at Bitcoin, they are completely blind to the trade that is already happening. There is one asset, right now, that crashed harder than Bitcoin on the way down, bounced faster on the way back up. And if Bitcoin makes one more serious leg higher, this thing doesn't just double, it teleports. And here's the part that should stop you cold. Wall Street already knows this. They have been quietly building positions for months. 14 analysts just slapped a strong buy on it, with a 12-month price target of $349. From where it's trading right now, that's over 150% upside. So ask yourself, why haven't you heard about this? Stay with me until the 13-minute mark, because that's where I'm going to show you the hidden insight that most retail investors will completely miss about this cycle. And by the time they figure it out, the move will already be done. Welcome to the Wealth Continuum. If you're new here, we don't do hype. We don't do hopium. We follow the money, we follow the math, and we show you where the smart capital is actually flowing. Subscribe right now, because what I'm about to walk you through is one of the most asymmetric setups I've covered on this channel. Let's get into it. Here's the situation as it stands today. Bitcoin hit an all-time high of 126,198 on October 6th, 2025. Then it got absolutely crushed. It fell over 50% from that peak, 5 consecutive red months. February alone, down nearly 15%. And right now Bitcoin is stuck, compressed, coiling, range-bound between roughly $62,000 on the low side and $76,000 on the high side. The market is confused. The Fed held rates steady at 3.5% to 3.75% on March 18th. Macro is messy, geopolitical tension is elevated, and retail investors are doing what retail always does. They're either panic selling at the bottom or sitting on their hands waiting for clarity. But here's what nobody is talking about. Beneath the surface of this Bitcoin consolidation, a different trade has already started moving. A trade that has historically amplified every single Bitcoin move. On the way up, by 2x, 3x, sometimes more. And here's what makes this moment so unusual. Even on the way down over the last several months, this trade somehow outperformed Bitcoin. Bitcoin fell 22% year to date. This trade fell less than 10%. And now it's bouncing hard off its lows. The asset I'm talking about is Strategy, ticker MSTR, formerly known as MicroStrategy. And I know what some of you are thinking. I know about MSTR. That's old news. No, it's not. Because what's happening right now with Strategy is different from anything we've seen before. And I'm going to prove it to you. Stay with me. Let's start with the basics. Because even if you've heard of Strategy, most people fundamentally misunderstand what it actually is. Strategy is not a software company anymore. It is a Bitcoin treasury machine. As of March 15th, 2026, Strategy holds 761,068 Bitcoin. Say that number again. 761,068 Bitcoin, purchased for a total of $57.6 billion at an average cost of $75,696 per coin. That is more than 3.5% of Bitcoin's entire fixed supply. Think about what that means. There are only 21 million Bitcoin that will ever exist. Bitcoin just crossed the 20 million circulating supply milestone on March 10th. Only about 1 million BTC are left to be mined over the next 114 years. Strategy owns 3.5% of the entire supply that will ever exist, and they're still buying. They have not missed a single week of purchases in 2026, 12 consecutive weekly purchases. The most recent? $57 billion worth of Bitcoin in a single week, March 9th through March 15th. So here's the question I want you to sit with. When a company owns that much Bitcoin, and Bitcoin goes up, what happens to the stock? But more importantly, why does the stock move more than Bitcoin itself? That's the insight, and that's what I'm going to break down right now. Because Strategy is not just a Bitcoin holder, it is a Bitcoin volatility amplifier. Bitcoin moves 1%. Strategy has historically moved 2 to 3%, sometimes more. That amplification, is the entire thesis. Quick question for you, and I genuinely want you to think about this. Would you rather own the underlying asset or the one that moves 3x faster in the direction you're betting on? Comment below. Seriously. Because your answer to that question reveals a lot about how you think about asymmetric risk. Now, let's get into the engine room. Why does Strategy consistently outperform Bitcoin during bull moves? There are 3 drivers, and each one builds on the last. Driver 1, financial engineering. Strategy raises capital through stock sales, through debt, through preferred equity instruments, and uses that capital to buy more Bitcoin. They're not just a passive holder, they are an active accumulation machine. In 2025 alone, Strategy raised over $25 billion and used it to acquire roughly 225,000 Bitcoin. In 2026, they've already deployed billions more. Most recently, the $1.57 billion purchase was funded primarily through sales of their STRC preferred stock series. They're converting market optimism, investor confidence, directly into leveraged Bitcoin exposure. Think about that mechanism. When the market believes Bitcoin will go up, investors buy MSTR stock and preferred shares. Strategy takes that cash and immediately converts it into more Bitcoin. The market's belief in Bitcoin becomes more Bitcoin on Strategy's balance sheet. This is not a passive bet. This is an active amplification machine. Driver 2, the equity premium. Here's something most people miss entirely. When you own Bitcoin directly, spot BTC, you get exactly 1x exposure to Bitcoin's price. No more, no less. But when you own Strategy stock, the stock market adds a speculative premium on top of the actual Bitcoin value. This premium is called the MNAV, the market to net asset value ratio. It answers a simple question. What is the stock worth compared to the Bitcoin it holds? Right now, Strategy is trading at roughly 1.07x its Bitcoin holdings, meaning the market is paying a 7% premium over the raw Bitcoin value. Why would anyone pay a premium for Strategy over just buying Bitcoin directly? Because they're not just paying for the Bitcoin. They're paying for the machine that keeps buying more Bitcoin. They're paying for the financial architecture, the debt, the equity, the preferred instruments that allow Strategy to lever up and accumulate at a pace no individual investor can match. They're paying for the acceleration. Pay attention to this part, because this next driver is where it gets insane. Driver 3, the reflexivity loop. This is the feedback mechanism that turns bull markets into explosions for MSTR. Here's how it works. Bitcoin goes up, Strategy's stock goes up because it holds more Bitcoin value. Because the stock is up, Strategy can raise more capital. More capital means more Bitcoin purchases. More Bitcoin purchases push Bitcoin higher. Higher Bitcoin pushes MSTR higher. Rinse, repeat, accelerate. This is a reflexive loop. And in genuine bull markets, these loops do not just go up linearly, they go vertical. Most people will miss this because they see it as just a stock moving with Bitcoin. But it's not a mirror, it's a multiplier. And the multiplier is currently coiled like a spring. Now let's talk about who is actually buying this, because this is where it flips from being a retail story to an institutional story. And institutional stories move very differently. Think about the position of a major hedge fund, pension fund, or wealth manager. They cannot just buy Bitcoin on Coinbase. They have regulatory constraints, compliance requirements, fiduciary responsibilities. They need regulated exposure. They need something that trades on a recognized equity exchange, something with audited financials, something they can put in a 13F filing, something that gives them Bitcoin exposure through the stock market infrastructure they already use. Strategy is that vehicle. It is regulated. It is listed on NASDAQ. It has SEC filings. It has quarterly earnings calls. It's Bitcoin exposure wrapped in a format that institutional money is already built to access, and the data confirms they're using it. MSTR's average daily trading volume, $2.68 billion. That is not retail money. That is institutional capital flowing through this stock every single day. And look at what the analysts are doing. 14 analysts currently cover Strategy. Average rating, strong buy. Average 12-month price target, $349.15. From current levels around $135, $140. That's over 150% upside on the analyst consensus. Wall Street's newest Bitcoin Treasury bull, B, Riley just launched coverage with an upside rating. These are not random crypto bros on Twitter. These are institutional research desks putting their names on bullish calls. And here's what gets really dangerous. This is where it flips. When institutions move into a trade, the trade changes character. It stops being driven by retail sentiment and starts being driven by capital flows. And capital flows, once they begin, tend to be persistent, large, and self-reinforcing. The smart money is not waiting for Bitcoin to break out. They are already positioned. The question is, are you? And this is where the story gets even more interesting. Because I want to take you to the scenario that nobody wants to talk about right now, but they will, very soon. Stay with me. Let me paint you a picture. Today, March 22nd, 2026, Bitcoin is at $68,951. It's pulling back from a 6-week high of $76,000. The market feels uncertain, cautious, heavy. But look at what's sitting just above us. $71,000 is the first significant resistance. $76,000 is the recent high. And above that, Standard Chartered has maintained their year-end 2026 target of $150,000. $150,000. From $69,000 right now, that's a 117% move. Goldman Sachs analysts are pointing toward improving liquidity conditions that could trigger another upward leg in the coming months. And on March 18th, the SEC and CFTC jointly clarified that most cryptocurrency assets are not classified as securities. This is a landmark regulatory moment. This is the kind of legal clarity that institutional money has been waiting for. It opens the door to broader ETF expansion, wider custody solutions, more institutional products, more on-ramps for capital. So now let's run the scenarios. Scenario 1, Bitcoin breaks $80,000. What happens to Strategy? Remember, Strategy's 52-week high was $457.22 back in July 2025. And right now it's at $135, $140. If Bitcoin moves from 69K to 80K, that's roughly a 16% move in Bitcoin. But Strategy, with its historical 2-3 rank upside beta to Bitcoin, that's potentially a 32 to 50% move in MSTR. From $140, that puts Strategy somewhere in the $185 to $210 range. And that's just the base case. Scenario 2, Bitcoin pushes toward $100,000. Now we're talking about a 45% Bitcoin move from current levels. Apply a 3x multiplier to MSTR. That's a potential 135% move. From $140, Strategy could be looking at $280 to $330, close to that analyst consensus target. Scenario 3, Bitcoin reclaims $126,000, the all-time high. This is the banana zone thesis that macro legend Raoul Pal has been laying out. The idea is simple. When global liquidity expands, and it is expanding, high beta assets don't just go up, they go parabolic. Tom Lee at Fundstrat has been consistent about this for months. Liquidity is the driver, and liquidity conditions are improving. Arthur Hayes is waiting for central bank expansion to fully deploy capital. The signal hasn't fired for him yet. But when it does, in a full liquidity expansion, high beta assets outperform everything, and nothing in this entire asset class has shown higher beta to Bitcoin than Strategy. If Bitcoin reclaims its all-time high of $126,000, run the math on MSTR at a 3x multiplier from current lows. The numbers get uncomfortable fast. Not uncomfortable in a bad way. Uncomfortable in the way that makes you realize you might be looking at the biggest asymmetric trade of this cycle. Here's a question I want you to sit with. When was the last time you had an opportunity where the downside was already largely priced in and the upside scenario modeled to multiples? Comment below, because I know some of you are skeptical. I was too, and that's actually healthy. Because now we need to talk about the risk. I need to be honest with you, because if I just painted the bull case without showing you the other side, I'd be doing you a disservice, and that's not what the wealth continuum is about. Strategy is not a safe trade. Let me say that again clearly. This is not a safe trade. It is a volatility trade, a leverage trade, a high beta, high conviction, high risk trade. And here's the proof. Strategy's 52-week high was $457.22 on July 16th, 2025. Its 52-week low was $104.17 on February 5th, 2026. That is a 77% drawdown from peak to trough. Bitcoin, over the same period, fell roughly 50% from its October 2025 all-time high. So yes, the amplification works in both directions. When Bitcoin crashed, Strategy crashed harder, forfeiting $7 to $104. That is not a paper cut. That is a wound. And the leverage structure, the debt, the preferred stock instruments, the dilution risk, these are real obligations. Strategy currently carries debt and preferred dividends that total hundreds of millions in annual obligations. If Bitcoin stays down for a prolonged period, these obligations create pressure. If BTC drops significantly from here, Strategy drops further. There is no soft landing version of owning MSTR in a Bitcoin bear market. None. So here's the question I want you to answer honestly, not for me, but for yourself. Are you here for stability, or are you here for asymmetric upside? Because those are two completely different portfolios, two completely different mindsets. Stability says, own Bitcoin directly or own a Bitcoin ETF, lower highs but also lower lows. Asymmetric upside says, own the amplifier, accept that you can lose more in exchange for the potential to gain more. Neither answer is wrong, but you have to be honest about which investor you actually are. Because people who buy Strategy thinking it behaves like Bitcoin get destroyed on the drawdowns. People who buy Strategy knowing it's a volatility trade, sizing their position appropriately and maintaining conviction through the swings, those are the people sitting on the right side of 150% analyst upside targets. Now stay with me through the next 2 minutes, because this is the part that will completely change how you think about this trade. And honestly, it might change how you think about crypto investing altogether. Here's something I want you to really think about. Most retail investors, right now, think they are early to Bitcoin. They bought Bitcoin at 50K, 60K, 70K. They're waiting for the next leg. They feel ahead of the curve. But here's the uncomfortable truth. When it comes to the best performing version of the Bitcoin thesis, they might actually be late. Let me explain what I mean. There are now 3 distinct layers of Bitcoin exposure in the market. Layer 1, Bitcoin ETFs. BlackRock's IBIT, Fidelity's FBTC, all the spot ETF products. Now, these are safe exposure, regulated, institutional grade, clean balance sheets. You get exactly 1x Bitcoin, no more, no less. If BTC doubles, your ETF position doubles. Perfect tracking. But here's the thing. It's safe because it's vanilla. It's vanilla because it's safe. Layer 2, spot Bitcoin. You hold the underlying asset directly. You control your keys. You have sovereignty over your coins. Again, 1x exposure. Pure, uncut Bitcoin. Layer 3, strategy. Same narrative as the other 2. Same underlying driver. Bitcoin price, but different speed. Completely different speed. Because strategy is not just owning Bitcoin. Strategy is actively accumulating Bitcoin using leverage, capital markets, and financial engineering. It's the acceleration layer on top of the Bitcoin narrative. Same story, different velocity. And in markets, velocity is everything. Think about it this way. Bitcoin needs to move 100% for you to double your money in spot BTC. Strategy has historically needed Bitcoin to move 30-40% to deliver a similar result. Because of that 2-3x beta multiplier, the narrative is the same. The return profile is completely different. And here's the part that nobody talks about. Institutions know this. Hedge funds know this. Sophisticated retail knows this. But the average Bitcoin investor, the person who bought BTC on Coinbase and is waiting for 100K, they are not even looking at this layer. They think they're playing the same game. They are not. They're in the slow lane. And look, that's okay. Spot Bitcoin will perform extremely well in the next leg up. I have no doubt. But if you want to maximize the asymmetric opportunity of this particular cycle, you need to understand all 3 layers and decide which one fits your risk profile. Because most people will miss this. They'll watch Bitcoin go from 69K to 100K and feel great about their 45% gains. And then they'll look at strategy and realize it went up 130%. And they'll ask, how did I miss that? You just learned how and when. Let me bring this all together. Bitcoin is at $68,951 right now. It just bounced from multi-month lows. It's holding above key support. The Fed just held rates steady, meaning no immediate rate shock. The SEC and a CFTC just provided the clearest regulatory framework for crypto this market has ever seen. Standard Chartered says 150K by year end. Goldman Sachs sees improving liquidity conditions. Strategy has 761,068 Bitcoin on its balance sheet, bought for $57.6 billion. It has not missed a single week of Bitcoin purchases in 2026. It has a 12-month analyst consensus price target of $349, from current levels around $135, $140. The reflexivity loop is dormant right now. But here's what happens when Bitcoin breaks above $76,000 and starts running. The loop activates. Rising BTC boosts MSTR. Rising MSTR gives strategy the ability to raise more capital. More capital buys more BTC. More BTC accelerates the loop. And then the institutions, who are already positioned, begin adding more. And then the coverage expands. And then retail catches on. And by the time retail fully catches on, strategy will have already repriced violently. Because that's what happens when leverage meets momentum. Price doesn't climb, it teleports. I've covered a lot of trades on this channel, a lot of setups. I have not seen a coil this tight, with this much potential energy behind it, in a very long time. The setup is real. The data is real. The risk is real. And the question you need to answer right now is simple. So the real question isn't whether Bitcoin goes higher. We can debate the timeline, we can debate the catalyst, but directionally, with improving regulation, improving liquidity, institutional adoption expanding, and Bitcoin's supply scarcity hitting milestone after milestone, the direction is not the question. The question is, what are you positioned in when it moves? Are you in the base layer or the acceleration layer? That is the decision in front of you right now. And look, I'm not here to tell you what to do with your money. I'm here to make sure you understand the full picture before you decide. That's what the wealth continuum is for. We don't just talk about what to buy, we talk about why. We talk about the mechanics, we talk about the risk, because understanding the trade is more valuable than any hot tip. If this video gave you a new way of thinking about the Bitcoin ecosystem, Smash that like button. It costs you nothing. It helps this channel reach people who need to hear this before the move happens. Subscribe if you want to stay ahead of the next setup, because I already have my eye on the next asymmetric opportunity and the research is almost ready. And drop your answer in the comments right now. Are you playing Bitcoin directly, or are you playing the acceleration layer? I read every single comment. I want to know where you're positioned. This is the wealth continuum. The money doesn't stop moving, neither should you. See you in the next one.